Before we get into today's episode, it is almost the end of the year, it's almost tax season, and Nick and I are so excited to announce a new sponsor of the How to Film Weddings podcast.
That is Core Financial. John has used them for a couple years for doing his books and his taxes and his financial planning. I was talking to him about this time last year and he recommended Core to me, and I have been using them for all of 2019. Guys, girls, people listening, what is probably the most stressful thing that you have to deal with regularly in your business? I'm going to go ahead and say that it's books, taxes, and accounting, all of that. Would you agree, John?
100%. And having the team, Jeremy and the team over at Core, as basically another member of my team, an extension of my team, I've been able to focus on what really matters, and that's running my business and taking care of clients. So we are just so pumped to have an option for you out there. They're nationwide. And so if you're interested, definitely check them out. We're going to have episodes with them on soon, but we just wanted to jump on here before the episode to tell you how excited we are, and stay tuned for more from Core Financial.
And if you would like more information about Core and what they can do for you, head over to howtofilmweddings.com/core, and you can find out all of the information about them doing bookkeeping, about them doing your taxes, about them giving you a financial plan so that you should know if you should spend money in your business or not in the following months. It's a great investment. Yes, it costs some money, but it's going to save you so much money in the long run by hiring a company like this. We are so excited to have Core on board as one of our sponsors.
Your time is more important than working on financials most of the time. Shooting weddings is more important, making you way more money than worrying about your financials.
All right. Ready?
Yep.
Do you want me to start?
Sure.
Do you want me to get closer to my mic, or are you good?
I think it's fine.
Okay.
Before we jump into this week's episode of the How to Film Weddings podcast, I need to let you know that we had major technical difficulties with the audio. John and I don't sound really great, but that's okay. It's still quality content. It just doesn't sound as good as it could. So sorry about that, but I know you will enjoy.
Hello and welcome to the How to Film Weddings podcast. My name is John Bunn, and I'm joined today by my good buddy, Mr. Nick Miller. Nick, how are you, my friend?
Doing good.
I'm also joined again with one of our other good buddies, Jeremy Doorn. We are so excited to have you on the podcast today. Say hello, Jeremy.
Hi there.
And Jeremy's here. Actually, this is a continuation of an episode. We were going to just do one, but we had so many questions to answer that we're breaking this up into 2 episodes. So this is part 2 of our conversation with Jeremy, and all about taxes, all of the things with taxes. So let's jump on into this episode of the How to Film Weddings podcast.
Chris asks, does having a DBA influence your taxes?
No.
Okay.
I don't know. I don't know what else to say to that.
No, well, I think that's, your answer like, no, I don't think so. I don't know what else to say. But again, we are just hearing pieces of information from other people that they have told him, and someone probably told him, just get a DBA and then you can write off everything.
You can write off your house.
Or, right.
Just go write off your house.
And
with
for
the
those,
DBA.
a DBA is doing business as.
In Oklahoma, we call it a trade name, I believe they call it. It's basically, you've got a legal name, and then you've got, say it's John's Inc., but he does business as whatever you're selling, widgets, something. Widgets R Us or something.
Exactly.
But no, exactly. It doesn't make any sort of difference.
I have a question, and this is more just a general question that I think is for the listeners. Do you see, working with small business owners, common mistakes that most everybody makes? Like, what are some common things that, just tips for people listening out there? Like, almost everybody messes this part up, or is there anything that stands out to you that's too many things?
There's a lot. So I'm just trying to go through the ones that I've seen lately, because it's a lot of the same stuff. I think we've already talked about some of them. I think people doing their own payroll is a terrible idea. John already talked about why.
Terrible.
Yes,
Terrible.
and I've got
Terrible.
plenty. I could tell you stories from here till tomorrow about stories about people paying way too much penalties for just for not doing payroll correctly. I think reconciling to a bank account, people miss a lot of expenses doing it that way. Some people miss the home office deduction. Some of the smaller ones, again, a lot of the ones that I'm dealing with, we're doing monthly books on, so we don't miss a whole lot.
Mm-hmm.
So this would be just people that we've done tax only work for in the past. And yeah, I mean, you got, do you have your cell phone? I mean, people will just give me just, a piece of paper that'll say, I had this much income and this is my one expense. And I'm thinking, you probably got more expenses than that. So it's really more about them not knowing what they don't know.
Disorganization.
For sure.
Yeah.
I don't think I tracked mileage for the first 4 years of my business. And, it's a big thing that you can, really help you. So, for people, I just thought of this one. Do you have any apps or ways that you recommend people trying to track their mileage and how to keep track of that?
Yeah, I don't have any apps. There are apps out there that can track your mileage for you. I think, they tell you to have a log or something, and that's where the apps come into play. Usually, if you don't have a log that you've taken all year, if you can go back and you can look at your schedule and see where you've been and go to Google Maps and do that sort of thing. A lot of the business owners that we deal with don't do a whole lot of mileage because they have company cars. So we end up taking, because you can take mileage or the auto expenses that are the actual expenses from them. So sometimes we'll look at which one's bigger. If people drive a lot, then sometimes mileage can be more than the other. But yeah, I mean, there's whatever works for different people. There's all kinds of different ways to track mileage for sure.
But you should be tracking your mileage. Yeah.
If you travel a lot.
But I mean, that's even if you're shooting a lot on, you're going to a wedding, I can, driving 20 minutes home, there and back, I can count that because I'm right.
Yes.
Yeah.
Yes. It's a temporary work environment.
Yeah.
Speaking of vehicles, all that kind of stuff, we have a question from Matthew. It's kind of on the heels of a question earlier, like just a comment about purchasing vehicles. He said, should I write off a vehicle purchase for my LLC if I'm only part-time doing videography?
Well, the easy answer is no, because you said you were doing it part-time. But like we talked about before, when you've got different assets, if they're used more than 50%, usually you can get away with calling it, 100% or whatnot. With vehicles, if it's not even close to 100%, then you can depreciate the portion that you are using it for business. So if it's 60% or if it's 40%, you can usually depreciate.
And you just
the
kind
40%.
of tell, you kind of decide that number, or do you have to look at certain things of how many miles you actually drove it for work, and then?
Yeah, you would look at however you wanted to figure it. I mean, if you're driving 20,000 miles total and 5,000 of those miles are business miles, it's probably 25%. Just coming up with a rough estimate on what that would be.
And
So
you could write that off.
that portion of it off, and it wouldn't. So, and with vehicles, it's a little different. So it depends on the type of vehicle. There's bonus depreciation now with the new Trump tax laws. Bad word.
I didn't say it was a good or a bad word.
You
Completely
just
neutral.
okay.
Completely
It
neutral.
sounded like it was a bad word, but it's not. Neutral. We're all neutral.
Switzerland.
Yes.
I love all the people listening in Switzerland, by the way. We have a lot of new people from Switzerland. We like you. Neutral.
Yeah. So whether you can write the full thing off, that full 25% of it off, depends on the type of vehicle, and then it would just depend on.
And I think so many people just go try to buy a vehicle so they can write it off. You probably shouldn't be purchasing a vehicle for your wedding filmmaking business. You don't really need a specific vehicle necessarily. You need a thing that gets you from point A to point B that doesn't look like crap, that is safe and can get you there. I mean, And so I wouldn't recommend going out and buying like a brand new Lexus to look like you're somebody and saying, oh, I'm going to write this offer. It's not a wise decision, like using wisdom when it comes to this. Yes, you need a vehicle.
Yeah.
Cool. You're going to upgrade your vehicle. That's great. But I wouldn't say, hey, yeah, like
Something
go buy
practical.
a vehicle.
Yeah. Like, well, and a lot of people ask me, like, we're in December now. So people are always calling me, hey, I've got $50,000 in income. Should I go buy a $50,000 car? No. I know the radio ads are telling you, like, hey, you can write the full value of and you can. If it's a business vehicle, you can go write the value of that off. But is that the best business decision for you? It
Or
probably
personal finance decision for you.
any sort of finance decision. I mean, it's good for your taxes for next year, but then what about your taxes for next year? And then a lot of times you'll see people, they get in this trap of doing the vehicle thing. So they'll go and finance it, which is even worse. Go finance $50,000, get that full write-off now. So for the next 5 years, they're paying to write that car off, but none of those loan payments, they're not deductible. They're not expense. They're just paying down the loan. So you've taken the $50,000 and saved the tax. But what happens for the next 5 years when you have no expenses and then you don't have the cash because you're paying off that $50,000 and you're owing in tax because your income's going up?
Bad decisions. It's just not wise.
Well, and again, it can be wise if the vehicle's helping you make money, if vehicles are a way of some of your employees getting around or whatever. But a lot of times it can be a trap of that might not be the best decision. And those are the conversations you need to have when you're doing the tax planning. So that's the conversations that I have with my clients here in the third and fourth quarter of don't do anything stupid like that. Just think about these things. And I think that's what I do more so than anything is prevent people from making stupid decisions. I'm going to give you all of the information on how that's going to affect you. You're still a grown person. Like you can still go buy that car and get that $50,000 write-off. I can't stop you from doing that.
You're just giving us information. I still make the decision, and
I'm just here to educate you.
And then you're stuck with cleaning up my mess.
Yes, in April, but it's still going to be your fault.
Right.
And
Right.
on the whole vehicle thing, before moving on, like if you're in need of a new vehicle, like if next year I'm planning to upgrade my vehicle, I want to tell Jeremy that and say, hey, I'm going to upgrade because my vehicle's getting older. I've saved up some money or whatever. Like that's how I operate. And it's like I'm going to use this to get to my weddings. I'm going to get to work. So like I'm asking him specifics. So if you're going to if you need a vehicle, obviously that's a good time to write off that tag or write that off in that year because it's like, yeah, I'm upgrading my vehicle. Like vehicles go bad. You need new vehicles.
They don't last forever.
Yeah.
I mean, it would be nice if they would. And there's a lot of upkeep. I mean, as they get run down, it might be cheaper to just buy a new vehicle. Mm-hmm. Well, that's where the tax planning and any of the planning for the whole year comes in is if you're going to need it at the beginning of the year, can we back it up into the next year and get that tax deduction? And how's that going to help you in taxes and maybe free up some of that money that you would be paying in taxes?
Yeah.
There's just a bunch of different variables there.
Don't just go buy brand new cars, people.
Right.
Please don't.
Especially financing new cars for your business. As a
Please.
wedding filmmaker or wedding photographer, not a good plan.
No.
Not the best plan I've ever heard.
Yes, I would say in general that's probably not the best idea. Yes.
Probably not. Richard says this, and this might be more lawyer than accountant, but you can at least point us in that direction.
Yeah.
What are some of the simple steps to go to being legally identified as a business? Is that just doing a sole proprietor? Does he need that for taxes, etc.?
So a sole proprietor that's basically just you operating under your social security number.
Okay.
So there's not really anything with that so most business entities are registered at the state level. So if you had a sole proprietor, if you were collecting sales tax or something like that, like in Oklahoma, if you were having to collect sales tax, like you were doing retail, then you would have to go fill out the business registration to get you a sales tax ID so you could collect sales tax. But if you were just a service business and you were sole proprietor, you wouldn't necessarily need to do anything. And then from there, like the LLC or any sort of, so an LLC, if it's just single member LLC, again, registered with the state. In Oklahoma, it's $100 to register it. It's fairly simple to do. If you had a multi-member, it's really multi-member or some sort of corporate structure, like you were forming an actual corporation, whether it be an S Corp or a C Corp. it's always for those entities. I always recommend people go get legal advice from a business lawyer, so that if you have a multi-member LLC, that you're getting an operating agreement drawn up by an actual lawyer. I mean, you can go get a general operating agreement on Google, but if you're working with a partner, you should do it with a lawyer. And same thing with a corporation. Like, you can go register a corporation by yourself, but if you really want it legally all tightened up, it's probably best to find a lawyer to get all that stuff.
Finding a pro to just make sure you're doing
Finding
it right,
a pro.
especially when it comes to your business, like the legal side of things, your taxes. We can't stress it enough.
Do you remember that wedding from a month ago? Yeah, like that one that you needed to start editing yesterday? But you also need to prep today for your wedding tomorrow, and you're leaving for your first vacation in forever on Monday. So what do? It seems that the only creative part of your edits are the excuses you're going to have to give your clients. We have the solution, Wedditor. Wedditor is a team of top wedding editors, project managers, and account coordinators that help us wedding filmmakers edit. They match the right editors with your style so you can spend your time where it matters most, on your business. Nick and I both use Wedditor, and we don't know how we would run our companies without them. It takes a team to build an amazing business, and you shouldn't try to do it all on your own. Head over to howtofilmweddings.com/Wedditor to help you free up your time so that you can focus on growing your brand. Be sure to use promo code HTFW for $50 off your first project. Wedditor, more than freelance, more than outsourcing.
How do you deliver your wedding films? Dropbox? Disk? A subscription service that is way too expensive? We have the answer for you. Wedflow. Wedflow is a cloud-based digital delivery system that we love. I personally have been using Wedflow for months, and I can't get over how great of a service it is. First off, Wedflow is pay per project. That's right, you only pay for the data that you need. Wedflow uses a premium viewing experience accessible on all modern devices and playback up to 4K. With custom branding and theming, wedding filmmakers can deliver an experience that's truly on brand from start to finish. Head to howtofilmweddings.com/Wedflow and upload your first project for as little as $1 per gigabyte. Wedflow, a whole new take on wedding film delivery.
For sure.
Alex has a question, which I think is a good question. He says, or she says, I'm not sure, work for hire. How do you manage people you hire under a contract on a consistent basis? So I guess, thinking about us as wedding filmmakers, we hire second shooters. What are some of the things, the bullet points, tips, tricks to making sure we're doing that right? I'm bringing on somebody new to shoot with me for the first time. What things should I be thinking of or thinking about?
From a tax perspective, first, if it's going to be a contractor, you need to get them a W-9 before they start working, just like an employee. I think back to the question about what do you see the biggest issues with small businesses. I think people doing W-9s and doing 1099s is one of the big issues, because a lot of times when you hire a contractor, you don't know if you're going to pay them over $600 and have to issue the 1099. So people just go willy-nilly and don't get the W-9s. And then when you go to file the 1099s, you don't have any of their information, so you really can't give them a 1099. You can't file them. And the penalties for not doing those now, the IRS is really kicked up on those penalties. So that's the first step.
So anybody, before they work for you, you can download a W-9 form.
W-9.
And have them fill it out, scan it, save it into your computer, send it to your tax person, say, hey, this is a new person. That's step one, for sure.
For sure.
I don't know if this is your realm or not, but I know, like, whenever you're doing subcontract, employees, stuff like that, are there certain rules or things with, like, how you treat them? It's like,
nicely.
Well, right,
nicely.
But isn't it true, like, if I have someone that, like, legally from a subcontract, like, I cannot tell them, like, times, like, when to show up and, like, that kind of thing? It's like, legally, isn't that kind of the case? Yeah.
So that's a tax issue too. So that's whether somebody's a contractor or an employee. So a lot of times there's this grayness, like, I don't know, and a lot of times people just want to put them as an independent contractor when they might be an employer or an employee. And so we actually have a little checklist that I give people, because I'm not going to tell you whether someone's a contractor or an employee. I'm just going to educate you. Again, you're a grown person. You can make your own decisions. I'm just going to give you the information. But yeah, a lot of times when it's employee versus contractor, it's going to come down to control. What kind of control do you have of the hours, how they work, the quality of their work, all that stuff. So if you don't really have a whole lot of control over that, and they've just been hired and they get it done how they see fit, then they're probably leaning towards being a contractor. If you give them the tools to do it, tell them what hours they're working, all that kind of control-ish stuff, then they're probably more of an employee. And then from there, you've got to, if it is an employee, that's why people don't want to have employees typically, is you've got to pay payroll tax on it because you've got to match the Social Security. You've got to pay unemployment tax. You've got to have workman's comp. So it just becomes expensive to have employees. That doesn't mean that you can't tell the IRS they were an independent contractor because I didn't want to pay them as an employee. That's not an argument the IRS is going to accept.
That won't hold.
That's fine. You're fine.
No, because I've heard people tell me well, it's just more expensive if I pay them that way, so I'm going to pay them as a contractor. And I tell them that's not a very good argument.
It's not legal.
No,
Yeah.
well, legal or not, that's just not a very good defense if the IRS was to come in and try to. And what happens is people will treat people that are employees, they'll treat them and pay them as independent contractors, but they'll treat them like employees. And then the way they get caught, the way that I've seen people get caught, is those people that have been paid like independent contractors, when they quit or they lose their job, they go down to the unemployment office to go claim unemployment. The unemployment goes, "You're not an employee. You've never been paid as an employee." And then they go, maybe we should go talk to this employer and see if he's paying his people right. And then they end up that's how they end up getting caught.
Yeah. And it's different for each company, different for each state, different. So there's a lot of rules that go around it. But when it comes down to it, if you're bringing somebody on, that is the time to get in touch with your tax professional and say, hey, I'm having Jimmy come shoot for me. He has all of his own gear. I have to have him at the wedding at this time to this time, and I have to have him shoot the way that I want him to shoot to match my brand. Because I bring on people to come shoot for me or go lead a wedding for me, and so specifically for each business, it's different.
Well, yeah, and every situation is different. So that's why we've developed this contractor versus employee checklist to just kind of give you some, is it yes or no to these different questions. And then, the final determination is yours. And a lot of times, if someone's kind of gray, you can kind of come up with ways of, making them a contractor. Have that person invoice you for the work that they're doing. If you invoice me for work you're doing, that kind of makes you a contractor. That's not all of the steps of becoming a contractor, but if it's leaning towards there and you want to make that official, if someone's billing you for their work, and you're not controlling anything they're doing, that kind of puts them more into the contractor role than the employee role.
It can definitely get confusing.
There's a lot of gray.
Especially with wedding filmmaking, wedding photography. And so having somebody like Jeremy to be like, here's what I'm doing. What does the law say this year about this? Because they're tightening it way up.
And they change it,
and it's like, you tell me. And so that's my favorite thing about having someone like Jeremy in my corner. It's almost like in my office next door to me is an office that is my accounting department. And I don't need them, but maybe an hour a month. And so they're able to fully focus on this, know the laws, know the rules, and they are the pros when it comes to this. And it just saves me all that heartache of oh my gosh, is somebody going to be knocking on my front door saying I owe sales tax, or saying, hey, you're going to jail because you did, or what? And it's you don't have to worry about that stuff. And so again, I can't say it enough. We can't say it enough, just how important it is to have somebody that you're able to check in with that is a pro, that's not just your friend from church, or that is actually knows what the crap that they are doing.
Yes.
So
and has seen a lot of this stuff. So there's a lot of experience there.
Chris asked this question. He said, it's 2019 when we're recording this. So for deposits collected for weddings in 2020 and 2021, do they get tallied in 2019 income? Or do you only claim earnings on 2019 weddings and wait till 2021 to claim the rest?
good question, Chris.
That is a really good question. Yeah, so typically with a small business like that, things are so they're typically on the cash basis. So you would probably you claim it when it's received. You could probably make some adjustments if you had some financials to collect those as deposits. Put those cash and put them on a balance sheet as deposits, just like you would for like a rental property. Like it wouldn't be rent when you pay the deposit; it would just be sitting there as like a deposit, and then when you leave, it would come through on the expense line. But yeah, I mean, I think you can put them. It would probably be taxed as 2019 income.
Yeah, and so like for me, somebody might book a wedding, say $7,000 wedding, they pay me $1,000 today. And I've gotten into this a couple of times where it's like they paid the $1,000 now, and then I paid taxes on $7,000, and then next year comes around and they cancel their wedding, but they've only paid $1,000. How does that work? Like, I mean, it's
no, you would have paid tax on 1,000.
That's right. Yeah.
So the 6,000
That's
that
why
you
that
didn't
makes sense to pay the taxes only on what you've been given.
yeah, on the cash basis. So that's why typically in small business, and this is again a huge generality, but typically small businesses want to report income on the cash basis. So you just pay tax on whatever you've collected. So then that next year when you don't collect that $6,000 because they canceled or hired Nick, then you don't know, maybe.
Probably. I would hire Nick.
Then that $6,000 you never collected it, so you're never paying tax on that.
Yeah.
The income tax.
And so again, as we keep saying, you need to hire.
I sense a theme. I sense a theme.
Every
I mean, that's
situation is completely different.
Yeah. and
Every
so-
business is different.
But yeah, I wouldn't be paying taxes until I received the money, especially as a small business wedding filmmaking crew of 5 or less people. Like, it just doesn't make sense to pay the full taxes until you've gotten.
Yeah.
But I think what he was asking, was, I think you might have it backwards.
Okay.
He wasn't talking about paying all the taxes for $7,000 now.
He was
was
paying
talking about
on the
deposit.
Oh yeah, I mean that'd be yes.
And that's cash. Yeah, and that's
You
cash. So
earned
you would
that
pay
this
it.
year.
Yeah,
I mean,
you earned it.
if you wanted to do it the other way where you didn't, I mean, could you? I mean, you're saying keep it as a deposit. So basically, there's money in a fund that you don't get to touch right now.
And then you're going to go
until-
spend it, and it's just going to confuse
Right.
everything. So,
Right.
yeah, I mean,
The
unless you've got a
easiest-
really good set of books and you've got a really good tracking system for all that, I mean, it doesn't matter. You earned it, and you collected it in 2019, so it's going to be charged to you in 2019.
The
Let's
easiest
keep it
way.
clean.
Yeah.
And if you end up giving it back, I don't know if you guys give deposits back. Typically, they're non-refundable. I don't know.
Yeah.
Typically not.
I don't know. Yeah.
Mine are not refundable.
Okay, but in the case that you were to give it back, then you would get that expense in the year that you gave it back. Same thing. So, yeah.
I'm gonna ask.
Good for you for booking weddings for 20 and 21 already.
Yeah, we do. Yeah,
I have one for 21.
I do too.
Wow, really?
Yeah. So Brandon asked a question. We kind of touched on this, but you said you had a checklist. But he's saying, what is the difference between a subcontractor and an employee in the eyes of the IRS? Definitely a huge gray area, in my opinion. You're right, Brandon. It is. So, what are some of the things that are big? Like, for sure, you're an employee of this company if you do this, and for sure, you're a contractor. What are the big ones to start with? And
Okay,
then
yeah,
some
we'll
of
start
the
with big ones
confusing
because there's not really any one determination. I think the overarching thing is control. Who has control over the work, how it's done, the scheduling, any of that other stuff. That really does. That's what's gonna push them, whether they're a contractor or an employee. Not whether they get paid hourly. There's plenty of contractors that get paid by the hour. Not whether they get paid a salary or anything else. And so, yeah, it really just comes back down to control, right? An employee's not going to invoice you for the work that they've done, but you're also not going to go and tell a contractor how he's going to get his work done, right? I'm not going to have a plumber come to my house and be like, all right, I need you to do this, this, and this, and this. No, he's going to come to your house and he's going to do it how he sees fit, right? So really, it just comes down to control.
in the wedding film world, that it is a gray area
For sure.
because of the way that it's set up. It's like I hire Justin to come shoot for me. He brings his gear, or I provide the gear, or if, it's like I'm telling him you have to dress this way, and you have to shoot it this way, and you're delivering me. They give me an invoice, they're, Justin, this photography company is invoicing me, keeping it separate. Like there's a lot of things that go into it. So it is, it is a gray area.
Well, I think with the wedding, and I think with the wedding thing too, you're talking about, you're kind of telling him when and where to be, but the wedding's kind of telling him when and where to be. Like you don't get to decide when the wedding is, right? Because you guys are just contractors for the bride and groom. So, and if he stands to lose money because it's a business, so there's a profit motive, and he stands to lose money because he's got profit and he's got his own expenses and everything else, then he's probably more likely a contractor. Yeah.
We know the time suck that is searching for the perfect song for your wedding film. MusicBed has spent years collaborating with artists, bands, and composers to make it easier than ever for anyone to find the right song for their video.
With amazing artists like Chapters, Tony Anderson, and The Light, The Heat, MusicBed is the best place for wedding videographers to get licensed music.
Their subscription service was a life changer for me, especially since all of their subscription music is pre-cleared for every social media platform: Facebook, Instagram, Love Stories TV, and my personal favorite, YouTube, all pre-cleared.
And if you are interested in a free month of a MusicBed wedding subscription, head over to howtofilmweddings.com/musicbed. When you sign up, use the promo code HTFW and you will get your first month for free.
Okay. Yep. Matthew asked this question, and I think I know how you're going to answer part of this, but I'll ask it. He goes, do you need to charge state sales tax? How does it differ delivering a tangible versus a digital product? And what if you're working for a couple who lives in a different state from you? And how does tax change for, destination? I'm shooting a wedding in California, so how sales tax and that kind of stuff.
Yeah, sales tax is awesome. The Nexus thing.
Said no one ever.
Yeah, I know, right? States
Sales
love
tax
it.
is awesome. Jeremy Doorn.
Yeah.
Put it on a shirt.
So I by no means am a sales tax expert. I do have a bookkeeper that files sales tax. So and we've got other people that are better at sales tax than I am. But it does matter from state to state, depending on. So, like here in Oklahoma, if you are giving a tangible good, you've got to charge sales tax on it.
And at least I know in Kansas, if we're digital, 100% digital, we don't have to do sales tax. But is that how Oklahoma is?
I believe so, yes.
But also a thing that I've heard people say is like, oh, I have a hard drive that I'm going to sell them, and I include it in my package, and it's $100, so I just need to charge sales tax on the $100. And I have learned if it is in the package, you're now charging sales tax on the whole thing, not just the physical thing. So that's another thing that I know people have done, or they purposefully wait until after the wedding to offer them that thing
to separate it
out so that they don't have to charge sales tax on the whole thing.
Or send them a yes, because that's what we
a separate invoice and say we do these separately and
because that was the only way. Yeah, because that was the way to be able to do it. Because in Oklahoma, when we read the sales tax law, it was, if there's nothing tangible in there and it's just digital information, sure, it's not taxable. But the second you put something tangible in there and it's included in the package, the whole package is now taxable.
And I think they are working hard, but they go slow. It's like the dinosaur or Titanic to say, because they want to get as much tax dollars as possible, of course, and make it where it's like if you're earning money, they want a cut. And so as the law sits now in my state, Oklahoma, yes, a digital product is not looked at as a taxable good. But I would assume that once the government catches up in a few years, they're going to start saying, hey, you owe taxes on all, like they want to get, but
it'll be when Oklahoma's legislature is short on their budget, and they'll go, oh, you know what? We'll just make that taxable, and that'll kind of clear up our budget shortfall, because that's what they do. They find other things to tax. So in Oklahoma, that's true. It sounds like it's similar in Kansas, but there's other states like, I think North Carolina. I have a client that was there, and they I believe they do charge sales tax on services, but it's a certain select list of services. So it really does depend from state to state. And then to answer the latter part of that question, as far as going from state to state, typically if you're, I saw that. If you're in Oklahoma and you're shipping goods out to somebody else, you're not charging that other state's sales tax, but you are supposed to. You think you're supposed to collect use tax. I don't know exactly how it's supposed to work, But it's not really. It's a whole thing with like the Amazon thing. Like it's a way bigger conversation than
Yeah, I think
I can shed light on.
Yeah.
Well, like, so let's just say, like, I just shot a wedding in California.
Yeah.
You know, they paid $10,000 for video, photo. What are my rules? What should I do? Should I charge? Should I file something in California because I didn't work there? I'm doing all the editing in Oklahoma. I'm doing, I'm not selling any tangible goods while in California. The only thing I'm doing in California is filming the wedding.
Yeah, you don't really have any sort of principal business in California, so that's not really California sourced income, really, right? And so you're not, you're not really providing. If you were to sell them something tangible from Oklahoma, you still probably wouldn't charge them because it's wherever you're shipping it to. So you charge them California but again, how's California going to know? Because you're not registered in California. Mm-hmm. So that's the problem the states are having collecting because nobody's really having it. So they're trying to figure out a way to make that happen because they want that money.
Right.
There's not a whole lot in place right now.
And again, based on your state, based on your country, based on where you're at, having, I know that whenever I sat down with you when we first got going, I was like, hey, we have photography, we sell albums, we do different things. Like, what does the law say when it comes to this? And you guys spent a ton of time, and we're like, we can't figure it. Like, we don't know. We're asking our actual legislators we have a guy that's in Congress, that's at the Capitol, that knows that we're asking questions. Like, what is this? What is the rule? And so it is very confusing and all of this. So depending on if you're in Vermont or Hawaii or Canada, or it's just so much different wherever you are. So having somebody that's a pro in your area to look at your specific situation, that's what it comes down to so many times, when it comes to our taxes and why we can't stress it enough. Mm-hmm. Mm-hmm. So,
yeah, all good. We have one more question on here. One more on here. Aaron asked this: if you buy something from a third-party site, something like Facebook Marketplace or Craigslist, something like that, with cash from your business, can you write it off as long as you document it, have some sort of receipt?
Absolutely not. Cash is not deductible. Just kidding.
I didn't know.
Wait, what?
I'm screwed.
Wait. Of course, like I said, if it's ordinary and necessary to your business and it's a business expense, whether it's cash, whether it's a debit card, whether it's a check, doesn't really matter how you paid for it. It can be a credit card too. Cash is just, again, like if we think about reconciling a bank account or a credit card account and we're reconciling everything in there, we have a balance to reconcile to because we know how much is supposed to be in the account. Cash, especially with small businesses, like you get to larger businesses, they have different like you have to fill out the cash log and all these different things. And small businesses should have stuff like that, but a lot of them don't. And so I always tell people, try to limit the amount of cash that you are spending because cash is just really hard to track. And if you don't tell me about it, I don't know about it because I can't ever see it.
Yeah.
So
and for people that are out there that are running their business just themselves, having separate bank accounts, one for your business and one for you. And I can't tell you how many years I just had everything lumped into one thing. And this is a really good piece of advice. So if you're listening, kind of tuned out a little bit, tune back in, because this is really important. Having a separate business checking account and your own checking account, and then writing a check. I have a Redeemed Productions account that writes a salary check to John Bunn. And then I don't buy groceries out of my business account. I don't buy anything. And that in itself becomes my profit and loss statement. It's easy to reconcile. It keeps it clean.
Yes.
The first few years of running a business, it was just like, here's my debit card, write a check to Redeemed Productions, and I'm dumping it all into one account, and I'm buying my groceries at it. Yeah. And then at the end of the year is when I would do my taxes, and I'm like, okay, that was a business one, that one's not. And it's just like this super confusing thing. And if you do it consistently throughout the year.
Well, and from the beginning, if you're going to set up a business and start doing it, just set up a separate business bank account and just run business stuff through there.
Same thing with if you're running your business with a credit card. You're doing. Don't make personal purchases with your credit card if it's a business credit card, because it's the same kind of thing.
Well, this is awesome. I'm so pumped. Yes, go for it.
Yeah, no, well, we've been talking to Jeremy, a lot, and kind of what he does, but maybe some of our listeners might be interested in hiring Core.
That's what I was going to say.
Oh, it was. Tell me about that. How about that?
No.
So why don't you, Jeremy, just talk a little bit about Core, what you guys do, and how you can help our listeners. Can you take anyone on as a client from all over the world, or just United States, or
Yeah. So, thank you. So we're located here in Oklahoma. We've got 3 offices: Tulsa and Oklahoma City and Lawton. We actually have started. We do bookkeeping and taxes and payroll, and like we've been talking about in this whole call, we do pride ourselves on doing tax planning for small businesses and really giving them peace of mind, and not letting them get any sort of tax surprises. We don't do international, so we only work with businesses here in the United States. But we do have lots of businesses outside of Oklahoma. So I've got Nick in Kansas. I've got some, like I said, in North Carolina. I've got a couple in Illinois. We're starting to do some national marketing. So we really are trying to roll this out nationally. So we do. If you're in any state, we can help you do the tax planning, get your business monthly financials, help you get clarity as far as financial processes and financial statements go, and then just really get you feeling good about not being so scared about taxes. It doesn't have to be that frightening.
Yeah, and with the power of the internet, we'll jump on, even being in the same city. We'll jump on a Zoom call or a Google Hangout and just be able to be right there and connected and walk through things. And so we're really pumped to have you all as one of the sponsors of our show, because we knew that this would be something that our listeners nationally would be, if you're in Montana or if you're in Oklahoma, it doesn't really matter. With the internet, we're right here. And, I knew that with the type of things that you're offering to me, that the people that are out there listening could benefit exactly the same from it. And so if you're out there and you're needing somebody, I would strongly recommend you can just go to howtofilmweddings.com/core, and you can find everything you need to know there about reaching out to them. There's some specials and some promos always going on. It's always changing. But right there you can go on, click a button, get in contact with them, and find out everything you need to know. I strongly recommend it, at least reaching out. They'll talk to you, see if they're a good fit for you for a monthly thing or a quarterly thing. So many different options.
Well, mainly just the monthly option now.
Mainly the monthly options. That's what I meant to say. That's what I was
But
saying.
Consultations, we just love helping small business owners. This is what we do. We've been doing it for, I think, 20 some years. I've been doing it 10 years. We've got hundreds of small businesses that we work with all over the country. So this is what we do. We pride ourselves in it, and we'd love to talk to anybody that is looking for help or just wants some advice.
Yeah,
Such good advice.
good
Thank you
stuff.
so much for taking the time to be on the podcast. I know the listeners are super, probably their brain is really turning right now. So many good things.
Yeah, Jeremy, thank you again for coming on the podcast. If you're listening to this on your Apple Music or Spotify or wherever or even watching it on YouTube, because we have a YouTube channel, I want to tell you to check out howtofilmweddings.com. howtofilmweddings.com. We got lots of good digital products. You can download our email templates and really help you make you more efficient in your business with those email templates, being more efficient. So again, Jeremy, thank you for coming on. Until next time, we will see you.
See ya.
Thank you.